Afternoon all, how are we doing? Sorry I'm late. Been busy programming again. Never get my head out of programming when I get into programming. Morning in, even afternoon, even, EMAC, JC, Fletch, Crom, Amy, Derp, Yarp, how you doing? Day Trader FX, Criticals, Julio. So, big ADRs today. Loads of ADRs today. Pretty big movement. We've had quite a bit of movement on this Australian dollar. Started to bounce a little now, but we've had some decent downside on it. Aussie New Zealand come down pretty hard. Sorry, Aussie Swiss rather. Swiss franc's been powering up this afternoon as well. Aussie New Zealand got out of that perfect. Look at that for an exit. Entry, exit. Perfect. So yeah, so a fair bit of movement today. Obviously the Aussies had a battering this morning. New Zealand dollars had a bit of a flyer, but that's all undone. So the vast majority of this New Zealand movement we had this morning's kind of gone. So. Afternoon, IT. Brian, why? Why what? Why? Why? You can't just say why. Why what? So yeah, so fair bit of movement. DAX this morning got hedged on it. Huge moves on the indices today, the DAX. So we have had on the DAX today a 200% ADR move. This thing's gone out the gates. Obviously, it hedged out the gates because that's wouldn't be right, would it? Just to go and just pay us loads of money. It had to hedge me. So, but it just flew straight up to 200% of ADR. So we identified this area this morning as a potential resistance, which is where I started trailing the DAX this morning. Or did all this in the live room. So, so as we got up to this line, which is the lower part of the gap fill, I trailed it, got taken out on that pullback, entered an aggressive exit short, got out of that there. Again, couldn't have got that any more accurate today. Luke. But yeah, lovely. So nice grand banked on that this morning. But yeah, this thing's still moving, still going. NASDAQ, I've had a big rally on the NASDAQ. Fairly big rally on the S&P and obviously on the Dow as well. Not too big. But so yeah, we've moved up on the US indices. We're not far away from ADR highs, look. We are a gnat's whisker away from ADR high on that one. S&P, the Dow's got a little bit more room, but these two basically are getting close to ADR. So it might be a tricky open today because we've done a lot of movement so far. So we'll see where we go. But yeah, big moves today. So obviously the Aussie dollar CPI came out as negative this morning. We had the cash rate for the New Zealand dollar, which came out as expected, the interest rate. We had the Spanish CPI figure come out as a negative. We then had the German figures released or drip fed to us this morning. Where are we? There we go. Bavaria and Saxony released their CPIs, which were down. So we were expecting a negative number on the German figures when we got that. We were expecting a 0.1. We got a 0.4. So CPI negative for Eurozone. All bearish for the Euro. So not a massive reaction, I have to say, to those CPI numbers. Swiss franc's main thing that's powered up today, but not a lot of movement on the Euro. Bit up, bit down. The telly, why? Just had to. Oh, why? Yeah. We had a cryptic message in Telegram today. Really, you don't understand some people. It's a language barrier. The person is obviously Chinese or Japanese or something. Whenever you put anything through a translator, it never comes out right, does it? So yeah. Lots of movement all over the place. I'm not going to go through all the ADRs. Most of these Aussies and New Zealands you would have struggled to get into. I got into that one this morning. Lovely. Excuse me. Programming does this. Tires me out. Aussie dollar Swiss. So some of these have had reversal alerts, which you would have got into. Some of them haven't. So there's loads of ADRs all over the place today, but a lot of this potentially is going to carry on in the way that it's gone. So the Aussies specifically, I think, probably got a drop on those. So quite a few to look at. RSIs, we had lots of 4-hour RSIs this morning as well. They've all kind of played out. Euro pound is really the only one that's still there on the 4-hour. Still nicely embedded, and we're still down at this level. We looked at it this morning. It bounced off. We're still there. So potentially this is a nice support area because the market is rejecting this level over and over again. So it'll probably give up and we'll get a pullback on that. So that's the best entry at the moment on the euro pound. However, the euro CPI figures have come out as negative. So not that that really means an awful lot at the moment. GDP for the US dollar came out as a positive this afternoon. So the US, if we look at something, God, you can't even look at anything because everything has been affected today. So probably Euro US is the best thing to look at. You see, there's not a lot of movement on the GDP figures there. Pound US, not a lot of movement. So that US GDP figure didn't really bat an eyelid to it. This kind of cements my thoughts on the fact that the market is now bearish on the US dollar after that CPI number. We've had positive news for the US dollar, hasn't gone up. And this is kind of where we were at before when we were looking at terminal rate on the US dollar. Doesn't matter how much positive news you throw at the US dollar, it didn't go up. Every time you had a slight negative, it collapsed. So I get the feeling the market might be turning tail on the US, which means the indices have got a good chance of a rally into Christmas. Market's open. I've been waffling. We are open. We've been open for a minute. I'm short on the S&P. I am long on the NASDAQ. Fantastic. Hedged immediately across those two. That's going to be a good afternoon, isn't it? No trade on the Dow. Oh, range is too big on the Dow. Yeah, that whacking, we had a whacking great 5-minute candle come in just before the market opened. Look, huge candle. We've put in a massive candle as well. Look at this. Dow is awake today. No trades on the Dow today. Range too big. Hedged on the S&P, long on the NASDAQ. So the ideal for me today will be for the market to rally, which obviously it's been doing on the DAX all morning. So a bit of a whippy open today. If you're trading the opening range breakout strategy, you're probably trading the 15-minute opening range, in which case you're not hedged. I'm hedged on the 5. So you're probably long only on that one, but we'll see where we go. So we're close to ADR here on the S&P, and we're not too far away on the NASDAQ. NASDAQ ADR today is around about 4R from the initial 15-minute pre-market opening range. We're just running into the pre-market highs at the moment. See if we can get through these levels. Big move on the Dow. Look. That's a massive candle. 78 points. It's only got 193 ADR, so that's a big big load of volume coming at the open there. Okay, NASDAQ's out the highs. On our way to TP. Just wait for this candle to close. We've got a minute left on this candle. Just want to see if I get target on the NASDAQ out the gates, which would be lovely. Then we can deal with a hedge on the S&P. Two levels coming up on the S&P. That's a monthly high, which will probably have limit orders. Anybody trading monthly will be selling at that area, that whole area, basically. So we're looking upside targets today. 150 to 200 ADR. Lots of room on the S&P. NASDAQ. NASDAQ upside. Those some of these lines got so much crap on the chart. So that upside target, we've got two levels coming up, which are absolutely miles away today. These levels, I don't know what these levels are. These are obviously from another chart. So yeah, upside targets, we're out of all-time highs. We're not all-time highs, out of yearly highs here. So upside target on the NASDAQ could be absolutely anywhere. TP1 hit on the NAS. I'm trailing at 1R on this. Keep it nice and tight. Just get some profit locked in. So what's that going to lock in? 218. So that's locking in 570. Hedge is 550. So guaranteed a profit on these two today. That one's already banked $1,000, so it's a winner. Day is a winner, regardless of what happens. So upside target on the S&P. That's the monthly, isn't it? At 150 ADR. So that's 4,600, big round number. Which is 5R, pretty much spot on 5R. So that's where I'm going today. I'm going to hold target at 5R, which is 150% of ADR and is the 4,600 big round number. So easy target upside today. If it continues to rally, that is. NASDAQ's certainly going for it. There's your range on the Dow. Your initial opening range on the Dow is 76 points on an ADR of 193. So that's huge. You'll find it difficult to get a target out of that. This is the reason we have these ranges. So if you wanted to get a trade on the opening range today, on a breakout of that opening range today, you're going to need to actually make a profit. You're going to need the market to push way beyond ADR up to, and that's only going to give you a 1.5R on that range. It's just not worth trading. You could use a smaller stop loss, maybe go with 50% of the range or something, in which case then you've got something which is achievable within ADR, but the range is too big. It's putting too much volume there, so it's going to find it hard to get a rally up to ADR. Pulling back a little bit on the S&P. NASDAQ's still rallying. So DAX has just pushed up into a double top at the open and is rejecting. So we're finding some sellers coming in here, apart from the NASDAQ. Just seeing if there's any stock news today. No, doesn't look like it. Oh, there's JP Morgan down there. What was that? This one I just saw JP Morgan down there. No, obviously not. Right. We'll see where we go. So going to be locking in 376, 670, $700 minimum profit on the NASDAQ. So just got to deal with this hedge on the S&P. So I'm just going to leave that hedged, basically. See if we can get a hit up to 5R. That's going to be a hell of a run. That's got to do 150 ADR today. We need an 150 ADR move on that. That's going to be very hard for that to achieve, I think, today, but we'll see. It could do. So I'm just going to leave the hedge on the S&P. NASDAQ's hit target. I'm just going to get stopped out when that pulls back. There we go. Decent day today. About time, isn't it? Afternoon post. Post hoc ergo propter hoc. No idea what any of that means. Good name there. Right, so let's have a look through some of these FX pairs. So Euro Pound is an H4 RSI extension. We looked at this one briefly a minute ago. That's extended and embedded down there. Due a pullback. It's very orderly though. Pretty much any extension you get into on the Euro Pound, you're pretty much guaranteed an exit because all it does is just go up and down and up and down and up and down all the time. So it doesn't matter. Hit the button in either direction anytime you like. It just keep going up and down and get you out. So there's an H4 RSI extension there. You don't get extended that often on this one. There's a sell there. There's a sell there. There's a sell there. This is a buy. Yeah, so that's all you've had really on it. But yeah, pretty much plays out every time, but it's so slow moving. 38 ADR, it takes forever to get anywhere. So not the best pair in the world to trade, but it is extended. So it's a good opportunity to get in. Pound US dollar, been looking at this for the last few days, still extended on the 4 hour. We just about tapped over the 80 this morning. So this was extended up here this morning. We've had a nice sort of pullback for quite a few hours. It is starting to rally again a little bit at the moment. But we looked at this one this morning. We're looking for a pullback on that entire leg, probably down into that area there. So decent 50% retracement on that, or 38% retracement. So you've got a good opportunity for a short there. You've had a 15-minute reversal alert this morning, which we looked at this morning as well. But it's not really gone anywhere. This propulsion gap's holding up at the moment. They're buying this level. So might rally a little bit further. Again, US dollar, we didn't get any strength on the US dollar off the back of that news. So good news. GDP up. We were expecting it to increase. It increased by 2 percentile higher than we expected. Market's not batted an eyelid. So they're really not interested in this US dollar at the moment. US dollar Swiss, that's extended to the downside, still dropping. Okay, we're coming down into a support here. This thing's like a rocket at the moment. So this is a potential support. This is this area here. This is the most recent support that we've got to look at. First test of this at ADR, extended on the 4 hour. We didn't get any kind of push back last time we got extended on this. It's just kind of rolled over. So Swiss franc's really strong today, has been across the board on multiple instruments. We're really extended away from that 24 moving average as well. We've had no profit take. We're not coming back up to retest this propulsion by the US CPI figures. So this thing's due a pullback at some point. We need that Swiss franc to take its foot off the gas though. Swissy's very, very strong today. Everything coming down hard against the Swiss franc. So the US dollar obviously not holding up at the moment, but that's a really good support area for a bounce. If that doesn't hold, we're looking at the monthly low, which you'll find some limit orders sitting at that monthly low. That's the monthly low from 3 months ago. And then we've got obviously this low from the summer from back in July. So that's a hell of a way to go though. So I don't think we're going to get all the way down there without some kind of profit take move kicking off. Trouble is, it's not really getting stretched because the price action is very orderly. It's like I push down, sitting sideways, push down, probably quite possibly sit sideways. So quite hard to get out of this one at the moment. It's one of those that could turn into a bit of a squeeze if that US dollar continues to drop. So just be a bit careful with it. Scaling in wise, make sure you're spacing nicely if you are getting into it as a position. So that's nicely extended. So those are your RSIs. That's all we've got to look at today. Again, no hourlies today. We haven't had any hourly RSI extensions for a while, not any decent ones. I've not added anything to the portfolio for a while. The last thing I got into was Euro CAD on the hourly, which was all the way back there. Yeah, so anything that's obviously just played out has played out, but there's no RSI extensions on the hourly to look at. Lots of ADRs. So I'll just quickly whiz through the Aussies and New Zealand. So this morning's news was obviously negative Australian dollar. CPI coming down faster than I expected. Exactly the same as we've just had with the US dollar. We would expect continued weakness on that Australian dollar. New Zealand dollar held their rates. That gave them a rally this morning. And I said this morning that's probably not going to hold because it's not good news. It's not bad news. It's just a knee-jerk reaction. So that has pretty much undone itself today. So overall, probably weakness on the Australian dollar moving forward. So if you look at the Aussie CAD, these are all hits to the downside. So we've got a nice hit to the downside, bounced off of ADR beautifully there. 5-minute reversal alert, which you've had there. So we hit ADR, nice reversal alert, retested, potentially starting a leg up. So that's a nice little entry. I've got shorts on that at the moment. But all of these Aussies, just be a little careful. The Australian dollar probably, it will probably pull back, but I suspect we'll get new down legs on this now that CPI figures come out, because it means they're probably going to start to reduce their interest rates. So Aussie Swiss, you've had a reversal alert on this already. So this is 150 ADR now, as you can see, very extended, but just continuing to drop on the fundamentals there. Aussie New Zealand, got out of this one this morning. So this one I got into this morning, or rather the EA got me in this morning and got me straight out. Done. And Aussie US. So that one's dropping, but stalling out because obviously the US dollar is also weak. So we're just kind of hovering around here at the moment. So those are your Aussies. Your New Zealand dollars, very hard to get into any of these today. As you can see, didn't even get an entry on this New Zealand CAD. So that was the news spike. There's your reversal alert. We haven't even triggered it yet. So it's moved all the way up to 125 ADR, moved all the way down pretty much an ADR from that high, almost got back to ADR. No reversal alert triggered because that was the last batch of sellers before the high was made. So you couldn't get into any of these New Zealand dollars, but virtually all of them have just faded the move. So they were nice entries, but you had to take price action on them this morning. So New Zealand CAD, New Zealand Swiss, that one's undone all of its move. New Zealand yen only undone half of it because we've got a weak yen at the moment. So a week against a week equals a sideways. And New Zealand US. So that's undone all of its move as well. So those are all the Aussie pairs. We've also got in there Euro odd, which obviously hit to the upside. So everything rallied against the Australian dollar. You've just had a reversal alert on that one this morning. And a retest. Kind of there. We've had weak Euro numbers as well. So again, weak Euro numbers, weak Australian numbers. We don't go anywhere because neither of them have got an advantage to drive the market up or down. Euro Swiss is also an ADR hit. That's hit to the downside. You haven't had a reversal alert on that yet. That will be the first alert. This Swiss franc, though, at the moment is just on fire today, not stopping at all. So we'll probably get a pullback on it. If you look at it on the hourly, we've got a nice propulsion gap as we started that move down today. So good target to the upside, but we've broken through all of this support. We hit it, bounced, and slammed through it. So potentially with this Euro Swiss, we've got this second low coming up, and then we've got this area here which is probably going to act as a support level. So if we don't get a bounce from there, which is 150 ADR, we'll probably get a bounce from this area here, and then we'll look for a profit take. But euro potentially weak moving forward. Euro Swiss, obviously, the Swiss franc gets dragged down with the euro. So this is why you tend to find this ranges a lot. So if we do make a move down on this Swiss franc, they will probably undo that move at some point. So nice potential long opportunity on this one. Quarter of an ADR before you even get into it. So not the best entry in the world, but that one's extended. Euro New Zealand, again, that's another New Zealand dollar pair. You wouldn't have had a chance to get into that one. Pound odd, another Australian pair. So again, that one's rallied to the upside. You've only just tapped into ADR. Look, literally hit ADR, rejected straight off. You haven't had a reversal alert on that one yet. Really orderly climb on that though, so it's not really extended as we'd like. But ADR on 125 ADR on Euro Swiss. That Swiss franc's going mental. Look, very, very strong. Limit orders have triggered at that support area that I drew in, so we'll see if that holds. Pound odd and pound New Zealand was the other big one. So as you can see, it's all New Zealand and Australian related today, apart from CAD Swiss. That's the only thing that's not related to the Australasian pairs, and that's all because of this CPI figure. So loads of ADRs, none of them really clean today because it's been such a strong move. As you can see, it gapped down and it's just flown. Has faded it. So the ones that you got reversal alerts on have all played out pretty much. If you didn't get a reverse alert on it, then you had to take price action. So just really messy today, really messy. Let's have a quick look at where we are. So I'm out completely on the NASDAQ, out flat 730. So that's 1800 on the day, 527 hedged on the S&P. So I've just got to deal with the S&P today. We're at ADR, rejecting at the moment. So we've tapped into ADR. So we've got a fight going between that propulsion gap and ADR at the moment. I'm going to leave this on though. So I'm happy to take that loss because I've got $1,800 banked. So if we do get there, then I will try an aggressive exit on that at the top. Exactly the same as the DAX this morning. Yeah. So if we can rally up to that level, look to get out there and pull back basically. Okay. Any other pairs you want to have a look at? Oil. Just wanted to cover oil as well. We had a little bit of a rally on oil. There's a lot of OPEC news flown past this morning. I thought I saw some JP Morgan stuff. I wasn't going mad. I think there's a higher chance than others of a rate hike. The US. So yeah, there's been a fair old bit of OPEC discussions going on at the moment. They're trying to get a deal through. There's a lot of disconnect with the oil producing nations at the moment about levels. They all want to produce more oil and they're all being restricted because they're trying to drive the oil prices up basically, but stocks are dropping. So there's a lot of conflict at the moment going on within OPEC, which is causing a lot of volatility in oil. We're expecting oil to rally, but it's just not been able to get anywhere. So this is affecting the Canadian dollar as well. So this US dollar dropping and this oil issue that we've got at the moment is really affecting the CAD negatively. So we've had a big push up today and it's all reversing again. So a lot of volatilities. Just be careful if you're trading oil at the moment. You know, we've seen these huge moves going in and they all get undone very quickly. It's such a volatile thing. It's just not my cup of tea at all. Now I've been trading it for a year. I've decided I can't be bothered with it anymore. Much better things to trade. But yeah, so oil, we've got a lot of movement on that as well. So just be aware that's going to be affecting the Canadian dollar. We've got pound this afternoon, potentially with Bailey talking as well. He starts in 15 minutes. Be interesting to see if we get any movement on the pound as to whether we're going to increase interest rates further or not. If you look at the fundamentals at the moment for the pound, when it loads, we're at 5.25. We've been fairly stable. We haven't changed our interest rates. Aussies were the last ones to do interest rate changes. Everybody else now has frozen. Our inflation figure is coming down at such a fast rate. There's a possibility that Bailey might come out in the next week or so, possibly even today, you never know, and talk in the same manner as the Fed and the Euro, as this is coming down pretty nicely. We're probably going to be able to reduce interest rates faster than expected. We were talking about end of 2024 for interest rate drops from pretty much all countries. US is now the first to say May, pretty much definitely 0.25%, maybe even before that. However, yesterday, obviously, one of the Feds said we're going to drop it, and then 10 minutes later, the other guy said we're going to raise it. So the nice thing about the UK is we only really have Bailey talking. So we've only got one person driving the market rather than half the Fed. So there is, this looks like terminal rate to me. I don't think we're going to go any higher. So just be aware of that with the pound at the moment. If you've got any exposure long on the pound, we might get some weakness on that this afternoon. But that's pretty much it. FX-wise, it's volatile as you like at the minute, as you can see, but mainly Australasian pairs and the Swiss franc. So, and stock indices rallying like crazy. Look at this. Going again, look. So S&P flying above ADR. Absolutely flying. So we're above ADR now, S&P, heading to that 150 level. So 46 is the big round number, 4600. That is our next big round number target to the upside. So I've put my TP 5 points short or 4 points short of that 4600 round number. You will find limit orders triggering there. They'll be selling at the round numbers. Whether or not we actually get a pullback or a bounce off of it, we'll find out. But that's our next stop to the upside. Nothing ready to stop it. Anybody got anything else you want to discuss? Look at FX-wise? Anything? Somebody mentioned a prop firm to me this morning, or mentioned in Telegram prop firm for position trading. Can't remember the name of it. I'm not going to be able to find it now, am I? Ages ago. I can't find it now. Why is it you can never find anything? I think I bookmarked it, actually. Did. This one, FT UK. Yeah. So this prop firm does not have a daily drawdown limit. They literally have an absolute drawdown, which is 8%. If you read the small print, you have to pay extra if you don't want to use a stop loss. So this was, somebody was saying, you know, you can position trade on this because it's just an absolute drawdown. You have to use a stop loss, and that stop loss cannot be more than 2% on any one currency pair. So basically what they're saying is you have to have a stop in place, and that stop has to be equivalent to 2%, which means you can't really position trade on it. There is an option when you sign up to not use a stop loss. You have to pay extra to remove the stop. I don't know what the cost is because I haven't actually looked at doing it, but there you go. So it's 20, unlock level 8. What's this, a game? Joining fee refund. Yes, please. Doesn't change the price, is it? Evaluation retake. So you can pre-book your failure. So the no stop loss thing, it will cost you 20% extra to not use a stop loss, basically. So just be aware of that, because somebody mentioned it in the Telegram group. So I looked at it and I was like, oh, that looks good. And then I looked at the FAQ and I was like, yeah, doesn't look good. But you can pay extra. So it actually makes the cost a little bit high. So if you want to take a 100, I mean, they do a 90K evaluation rather than 100K. So if you want to do a 100K evaluation, which is kind of what I tend to go for when I've been going for prop, it actually costs you $538. So it's not uncompetitive. I've never used them, but just in case anybody wondered, because somebody was talking about that in the Telegram group this morning. AZ, alongside MR on the EA, I'd like to run a trend strategy manually on the same account for when times are quiet. Can't see charts all day because of work. Any good way to be indicated to a trend pullback? Don't know. Depends what time frame you're looking at, doesn't it? Basically, if you can't see the charts all day because at work and you want to trade a trend pullback strategy, you need to be trading the 4-hour charts. So what you could do is just use the market reversal alerts EA and use the trend set file. There's a strategy on the website for it. Trend pullback. That one. So you can use the market reversal alerts EA to trade that. And basically you just set it to short. So for example, you set it to use the 24 and 72 moving averages on the daily, and it will only trade when that's red. So why not just use that? Use RSI extensions. When you're in a downtrend, use upside RSI extensions to enter short. Then you are trading pullbacks. That's the way I would trade a trend anyway, using moving averages. That's what trend trading is. It's just trading moving averages, isn't it? Monthly range hit on the US dollar Swiss. Jeez, this thing's melting, look. Swiss franc on fire today. I like running H1M5 market reversal. Just want to run a manual trend strategy alongside it. Don't know. I just would use the market reversal alert CA to get you into trend. You can use stop losses. The market reversal alert CA is a absolute toolkit. There's very few strategies you can't do with it. It uses moving averages. It uses market reversal alerts. It uses RSI. So it can trend trade and it can mean revert. There is only trend trading mean reversion. It doesn't do breakouts. Apart from that, you can trend trade with it and you can mean revert with it. US dollar Swiss ADR. So there's your ADR hit as well today. US dollar Swiss. And we're at that support level. So if that breaks, we got a 200 ADR move to the downside. The next support somewhere around that area. So it's that level there, that level there. So it's this area. Somewhere around 175 to 200 ADR today. If it doesn't bounce from here, that's your next support. When you get into 3 or 4 positions on a trade, do you try and gain 0.25% per entry, or look at it as a whole? It's a position. 3 or 4 trades in a position. My position is my position. You've watched the Bootcamp. I think you might have missed a bit of the Bootcamp. These are positions. So these are individual trades within this position. My position is short, and I've got 4 trades in that position. My position drawdown is 0.77%. I get out when I get out. My position is short. That's it. US dollar Swiss, I am long. Adjusting trades. You get out when you want to get out. I mean, there's no, I don't really understand the question, to be honest. If you're in 3 to 4 trades, you get out when you get out. When you get out is up to you. If you want to get out with 0.25% per entry and you're in 4 trades, you're looking at a 1% gain. Yeah? Is that what you mean? You don't look at it like that. I'm long, right, on the US dollar Swiss. My average price is there. I will get out wherever I can get out, and I see an exit when I get above here. Until I get above there, I'm not getting out, am I? I'm in it. That's where I'm targeting at the moment. I will adjust my target as my price moves. So my price is here at the minute. If I take another position, my price is going to drop down. If it drops down further, I'll take another position and my price is going to drop down. I get out when I get to a level I think we're getting out at. I don't look at price. I don't look at an amount of money. I'm looking at entering and exiting the market. Money is irrelevant. Look at this US dollar CAD. No, what did I get out of this morning? What did I get out of this morning? CAD's... No, not CAD Swiss. Aussie New Zealand, wasn't it? So the reason I got out of the Aussie New Zealand this morning was because there's a support area there that I was anticipating a bounce at. So I got out of there. How much money that was worth is nothing to do with me. I don't care. I get out where I think market's going to. This is the problem everybody has with trading, yeah? If you take a short trade here and you put a stop loss there and your strategy requires you to have a 3-to-1 risk to reward ratio, you will go, I need to exit my position here. Yeah? So I'm shorting from here. My stop loss is there. That is my target because my strategy says 3-to-1 risk reward. What your strategy doesn't know is that there is a support level there and a support level there. The chances are when price gets to the support level, it's going to bounce. You're never going to get your target because there's too much in the way to push away from your target. Yeah. So if I was to get in a trade there with a stop loss there, I would get out when we get to this area here because there's a high probability of a bounce. It didn't happen here because we had a news event this morning. But if that news event hadn't have happened, there'll be limit orders sitting at this level, waiting to trigger long. So your target is there. Your target is not an amount of money or a risk-reward ratio. Your target is where price is likely to turn from. So when I'm in a position, I'm looking at propulsion gaps. CAD Swiss 125 ADR. I've just got out of that CAD Swiss break even. That position. I'm going to add that back on again. Really wish I'd have got out of the CAD Swiss up. Annoying. So CAD Swiss, for example, my average is now going to be absolutely miles away. I need to do this. This was an aggressive drawdown control position, which happened on Friday, and I couldn't get out because I wasn't here. You know, these are things that you can't do anything about. So I'll be getting in again here. My average will then drop down again. So I will be targeting propulsion gaps to the upside to exit positions. I'm not targeting anything but where I think price is going to go. I think price is going to go up to there at some point, but that's an easy target to get out of, that propulsion gap. We accumulated there for 4 days and then we broke through that support. So that level or that level is where I suspect price will return to. So when I take another position here and that average drops down below there, I will exit when we get there. Not exiting there because it's $300. 1/3%, 1/4%, or anything. I'm exiting there because I think that's where price is probably going to bounce. So I want to get out if it's going to bounce. How much money that makes me, I don't know. It's money. The market pays you what the market pays you. You can't say to the market, I want 1/3%, 0.5%. Get out when the market allows you to get out. And the market will have a very uncanny knack of every time you go, oh, I'll let it go another candle, of doing that. Just get out. Put it in, make it green. Absolute collapse on the indices from that level for some reason. That's obviously ADR, but markets just come down hard. Have we got someone talking? Oh, here we go. Fed again. We've got Bailey talking at the moment. But Bostic, a downward trajectory of inflation will likely continue. So US dollar probably rallying off the back of this. Let's have a look at what Pound US is doing. Oh no, Pound US is probably not a good thing because Bailey's talking. Euro US. So US dollar rallying on the back of Bostic. US dollar rallying, stock indexes drop. Skeptical of being on track for a 2% inflation. This is kind of harking back to what was said yesterday about possibly increasing rate hikes again. I'm not willing to take another rate hike off the table. Again, bullish US. This is what was said yesterday when we had that U-turn the Fed made, or two people in the Fed talking opposite agendas. Markets of the Fed have been having a forecasting. Markets and the Fed have been having forecasting battles. Damn right. So yeah, so they're rallying the US at the minute. So that'll bring all the indexes down. So right, so that completely screws my upside target theory today. So downside targets. Very hard to pick, isn't it, today? So obviously we've got a very small gap here, which wasn't completed this morning on the S&P. That is ADR low, and it's also the low of the day pre-market. So I would have to say the obvious support bounce today is going to be at ADR stroke pre-market stroke gap fill. Somewhere in that area, we're likely to find buyers. So if this can collapse on its arse today, we'll get a nice bounce out of it, dead cat bounce. Well, hopefully a springy dead cat bounce. But the rate that we got that movement on the DAX this morning, we did 175 ADR on the DAX with relative ease. We had literally 2 down candles after the initial rally. So you've got to say there's a good chance that the US dollar is going to rally for the rest of the day, and this index is going to come down at the same rate as the DAX went up this morning. So don't get too eager with your exits. Likewise, yesterday, one member of the Fed came out yesterday and said we're going to drop rates. 10 minutes later, someone else came out and said we're going to put rates up. So this guy's just said we're going to put rates up. So don't rule out someone else coming on in a minute and saying, nah, forget him, it's going down again. They're in fighting at the moment. So we're just getting mixed messages constantly. So inflation will be stubborn, more stubborn than we'd like. Again, interest rates higher for longer, not coming down in May. Bullish. They're just causing absolute chaos. Yesterday was the same, absolute chaos. Kind of just don't want to be in the market when it's like this because you just can't, there's absolutely no logic. Just whatever the hell. Nightmare. 752 banked on the NASDAQ reversal. Good job. Well done, Brian. $30 more than me. Yotko, to continue my question from Telegram this morning, which two strategies would you recommend to start with? H1M5 mean reversion is my bread and butter. That's what I trade. H4M5 or H4M15 or H1M5. Those are definitely that. That is the original Bootcamp mean reversion strategy. So if you're going to pick one strategy, you want to pick a mean reversion strategy. So any RSI extension with a lower time frame entry. For me, it's H1M5. And then if you want to do another strategy, you need to pick something which is diverse from H1M5. So H4M15 or hedging. But why do you want to do two strategies? Why not just use one? H1 hedging is absolutely killing it at the moment. Has been killing it since I started it, but it's very high risk. But high risk, high reward. Yeah, it will double your account in 3 months. But at very high risk and very high drawdown. You're really the only one that can answer this question. The reason I give 4 strategies is so that people can pick a different strategy based on the time frames they are able to analyze and look at and their comfort levels with drawdown. Yeah, so the hedging strategy will give you much bigger drawdown than any other strategy, but it will return higher profit than any other strategy. H4M15, the original Bootcamp mean reversion strategy, is very slow, steady, doesn't have a massive amount of drawdown, will produce somewhere between 5 to 10% profit a month. H1M5 is somewhere in between. ADR reversals, some months it absolutely kills it, some months it struggles because ADR reversals will trigger off of fundamental news events like today, which could go into squeezes. So it does get squeezed a little bit more than others. They're different. They're different strategies. I can't really say. It's down to you. If you want to get used to position trading, H4M15 or H4M5, there's very little, and it doesn't matter which lower time frame you use really, is your slower, more steady strategy. H1M5 will give you more entries. But the thing, this is what I was saying to you, trying to say to you this morning in the live room, yeah? So let's look at today as an example. Right. So I'm going to use Euro Swiss as an example here. So for example, Euro Swiss, yeah, today it's an ADR extension, right? So you've got an ADR reversal entry. So you are long. Go down to M5. So we hit ADR here. So let's say, for example, that was the entry there this afternoon, right? So you're long there on the ADR reversal strategy because we've hit ADR. You're going long, right? You are also long there because it is an H1 RSI extension, M5 mean reversion entry. So you're long because of ADR. You're also long because of H1M5. H4 has just got extended on the 4-hour time frame. So the next 5-minute reversaler, you are also long H4M5 or H4M15. Yeah. So I teach three out of the 4 strategies that I teach. You've just gone long for the same reason. They're all extended. It's an ADR hit. It's an H1 RSI. It's an H4 RSI. See what I mean? It's the same strategy. You are mean reverting a drop. Well, pick one. But if you pick all, you are going to go long 3 times today on Euro Swiss for 3 different reasons. If you are trading the 5-minute, if you are trading the trend pullback strategy, you're above the moving average. You're going long on the trend pullback strategy as well. The hedging strategy, you're going long as well. 5 reasons to go long. You only go long once. You want to go long on the Euro Swiss. Do you see what I mean? You're just duplicating yourself. Look at this. So this is the ADR reversal. Euro Swiss, long. Yeah. This is ridiculously slow. Can't switch MT4s for some reason. This is the H1 mean reversion. You're not long on it yet, but you will be long as soon as you get a reversal alert. This is a H4M5. This will be going long as well on Euro Swiss on the next reversal alert. Why can't I open that one? That's the hedging account. Why is it not opening? I don't know. I can't open the hedging one for some reason. There's something really wrong with this connection to the VPS. Nothing wrong with the VPS. It's just my connection to it for some reason. It's really, really, really slow. I think it just needs a reboot. This happens with VPSs every now and again. But I can't get into the hedging one. But the hedging one will be in Euro Swiss as well. I'll open a second account and run them with different risk and different capital. Yeah, definitely have to have different accounts. Definitely. Otherwise, you're just going to confuse the hell out of yourself. Euro Swiss just gave an alert on H1M5. Yeah, probably. I haven't got one, but it'll be there. That'll be your reversal alert. Depending on your broker will have different candles maybe that have got different levels. But the reason I ask, AZ, is, for example, I took an exit on one of the trades on my Euro CAD position. Yeah, as I did there, look. In profit. A week later, I'm still in that position when I could have closed the lot when I took a profit. Yeah. You could. That's your decision. Again, this is why I teach in the bootcamp. You're going to get a very... You give 10... If I give 10 people the H1M5 mean reversion strategy, say... You can trade it with an EA, without an EA. You can use the 70, the 30, the 70-30, the 75-25, the 80-20 level. You can use whatever levels you want. Yeah. Everybody will get into positions at the same levels with the EA, but everybody will take profit at different points. Some people will be sitting there going, holy crap, that's $500. I'm banking that. Other people will sit there and go, I'm only 0.5% in drawdown. I'm going to wait and see what happens tomorrow. Everybody's going to make a different decision based on their pain level and what they've banked. Yeah, there is no right thing to do. This Euro CAD now has been going sideways, right, for 1, 2, 3, 4, 5 days. Since we broke down below that level. Support, support, resistance, 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 resistance. It ain't going up. We know that. It's tried 4 times to knock through the door and the door said no. So we can't go higher. Where are we probably going? Lower. Yeah. We don't know where we're going, but there's a good chance that this is going to drop because it can't rally. Yeah. So I got out of that position there because we hit a double bottom in a propulsion gap and it was a nice sum of cash. That's the reason I took it, was because I could stick $500 or $600 in my bank, and I did. If it rallied back up again, I would have added that position back on at the moment, it hasn't. So my position is I'm short, and I had an exit there and an exit there, and I didn't take it because that was a break even twice, and I don't want to take a break even. I want to take a profit. I've already taken a profit, so I could have closed it there and walked away with that trade. My decision was to stay in it. Your decision may have been to exit there yesterday and close the whole thing out, walk away with just that trade if you'd have taken it. There is no right or wrong answer. They're both right, because if it goes up to there and then it slams down to there, that's right. If it just drops from here, that was right, and it's right to stay in. If it drops from here and you don't take it off there and it drops down 3 ADR below, that's right. If it stays here and goes sideways and then pushes up and then it shorts and then it goes above the high, you enter a position there and you enter a position there and you get out at some point in January, that's right. Your job is to take this and put it there. When you do it is up to you. There is no right or wrong. When I took this trade off, it could have bounced out of that propulsion double bottom as I thought it was going to, or it could have slammed through it. If I'd have got out there, the decision for me to put that there was right. Whether it went down or up is irrelevant. My decision was I want to bank $600 or $5 or whatever that was. I don't know what it was. US dollar CAD's just hit ADR. US dollar's rallying hard. Indices are going to drop. Yeah, so there's no... See what I'm trying to say? This is why in the bootcamp, I talk about getting out, getting in, doing aggressive drawdown control. I talk about the process. There is nothing right about 0.25%, 0.5%, 0.75%, or a 1% target. There's nothing right or wrong with taking some of it off and putting it back on, or taking it all off, waiting, getting out early. It's up to you. What you're doing is you're entering into a position in a currency that is completely random in its movement and has a 50-50% chance of going up or down at any state of day, any day of the week, any week of the month. I have no clue where this is going. I am short, so when it goes down, I will bank it. When it goes up, I will scale in and wait for it to go down. I don't know where it's going. Neither do you, neither do the banks. This is going wherever the largest volume of cash comes into it every day. I don't know what tomorrow is going to bring. I don't know whether it's going up or down. What I know is I'm short, and if it goes down, I'll bank money. If it goes up, I'll move my position and wait for it to go down again. That is trading. Yeah. How much money you make each month is dependent on how fast and violent these moves are and when you're looking at the chart. If right now I go away and turn my terminal off and come back tomorrow afternoon, having not looked at my charts, this could be where it is now. It could be up here, or it could be down there. So if I don't have a TP on this trade, right, and I look at my charts tomorrow afternoon and it's down there, I will bank 3 or 4% profit. If tomorrow it moves down and hits ADR, and I'm looking at the chart in the morning when I open up, I'm lying in bed. First thing I do is open my terminal, bring up my P&L, have a look at the charts. If that's hit ADR tomorrow and it looks like it's just put in a hammer, I will close the whole lot out at 1%. So the difference between my P&L making 1% or 5% is the time I open the chart. Nothing else. I have no idea where this is going and how long it's going to take to get anywhere. What you bank is based on what you see. What I saw there was a lovely big amount in my P&L that I could make green and something dropping. I had another position in profit, so might as well bank it. You know what I mean? I can't be any clearer than that. Everybody wants do this when that happens. How can you have a do this when that happens with something completely random? You can't. You just do what you think is best at the time. Don't ask me. I ain't got a clue. If I knew where this was going, I wouldn't be sharing that information with you. I would just be making millions and millions and millions and millions of pounds. The fact that I don't know where it's going is why I make money, because I get in with a position I couldn't give a monkeys of which way it goes. I just wait. That's the whole purpose of position trading. You wait. Yeah, I mean, that's it. It's a case by case, trade by trade, position by position thing. You are managing a portfolio of direction on currency. That's it. I am hoping the US dollar and the Canadian dollar rally. If they don't, I will have to wait until they do. That's it. I have nothing I can do about it. I'm long. If they go down, I'm still long. The two things I have on my side are shutting them, taking a loss, or waiting and sitting through drawdown. That is the only two things I can do. I can close at a loss or sit through it. When it goes up, let's say, for example, let's use this as an example because it's a good example. I am currently targeting that. Yeah. See what I mean about targeting? I'm not targeting $1,000, 0.25%, 0.5%. I'm targeting that low because I know that price moves from support and resistance to support and resistance. That level there hasn't bounced once, twice, 3, 4, 5, 6, 7, 8 times through fluke. It's bounced 8 times because that is the previous level the sellers were trying to get through. And when they did, they are making damn sure it goes short. When it gets down to this level here, the guys that bought this are going to try and push it up because they are long. So when it gets down there, I know we're probably going to bounce. So I don't target a 2% revenue. I target where the market is likely to change direction. Because if I'm short and it's going to go long, I don't want to be in it anymore. That's it. That's all I know. It goes to levels, moves away from them, hits them, and the limit orders that triggered those shorts trigger again and drive it back again. I don't know which of them it's going to work at. Could be that one. Could be that one. If it's that one, I'm going to not make as much money as if I'd have targeted that. How big are your balls? That big or that big? That's literally the question at the end of the day. Are your balls big enough to hold that level, or are your balls big enough to hold that level? Mine are big enough to hold that level. Because I know it might bounce, especially as that is also an ADR. We know that bounces happen at ADR. So that level ties in perfectly with ADR. For me, that's exactly where I want to get out. Other people will look at this and go, God, I'm not getting out there. That's only a 38% retracement. We should be looking for 50 to 71.8 on it. Good for you. Hold it. If you're right, fantastic. Well done. You made 10 times more money than I did. But I'm not trading for you. I'm trading for my portfolio, my positions, and paying my bills. It's literally, I haven't got a clue. Big Les, yes. Managing trades in averaging, in buying, selling areas. I know 3 other traders on YouTube who do it. That's what everybody does. That's all there is. That's all there is. The only thing you can do in trading that gives you any clue as to where price is going is looking to the left. Again, all covered in the bootcamp. There's a big slide with eyeballs in it that says look left. Yeah. Yeah. So when this is coming down, the only clue I've got as to where it's going to stop is where it's previously had a reaction. Yeah. Other than that, I have no idea where it's going. Yeah. If it's going to go up, where's it going? There. If it's going to go down, where's it going? There or there. Yeah. It's going to move at those levels. Guarantee it. 100%. I've assigned magic numbers to 10 currencies using H1M5 Euro Swiss now alerts, but it's not can't read that. Not tested yet. Traded yet. Should I stick to the 10 tested ones? I don't know. The market reversal alerts EA just trades on your chart. So whatever chart you put it on, it will follow the rules that you've set and it will trade based on what I don't really understand the question, Guido. So basically all the EA does is follows your rules. So if you say when H1 RSI is extended and you put it on a 5-minute chart and it takes a reverse alert, if you tell it to, when that is over there, reverse and enter, that's what it will do. Regardless of what it doesn't, that's irrelevant. It doesn't know what it is. It just knows it's on a chart and it waits for a reverse alert when a condition is met. That's it. Not quite sure I understand the question. If you're worried about that you haven't back tested it on a currency, you don't want to put it on a currency because you haven't back tested it, that's up to you. All I would say is the backtest results are utter crap and not ever going to happen again. So you can backtest it as much as you like. All that's going to tell you is what's happened in the history. Future's nothing to do with history. Yeah. If you backtest the pound US dollar for the last 2 years, you would never have experienced a squeeze like that. I did. I was in it. Yeah. My backtests have never shown me that that has ever happened before. It did this year. Backtesting is, all backtesting will do is will show you a model of how something is likely to perform in a market condition. Market conditions are never replicated. There is no 2 market conditions that are ever the same. There's no 2 trading days or trading weeks that are ever exactly the same. So whatever you backtest, every pip that you look at is never going to be replicated again in the future. Yeah, backtesting is good for robustness testing and proving models work. Any set file you pick for any EA you test is never going to produce the results it's ever produced in a backtest because you're never going to get those same results happening again. What is position trading? How big are your balls? Exactly, it is. All trading is how big are your balls. This is why nobody can hold positions, yeah? So if you're short on these indices now, right, how many people just exited that? Yeah. This, let's say, for example, you got in short there, right? This thing went vroom, vroom. Another bear candle, indecision candle, bull candle. I'm out because I've just made all that money. You've just lost loads of money because you got out because your balls are too small. If your balls were bigger, you'd still be in it. That's this game. This game is, how long can you hold that? This is why people find it very hard to make money. It's really easy to lose money because when you're wrong, your stop loss gets hit. You don't have a choice. When you're right, you have to make a choice as to when you get out. And your choice has got to be bigger than that loss. Right now, everybody's scared to death. Look at it. Bullish. Suddenly gone bullish. Quick, everybody jump ship. Where's it going? It literally is that. This is why you need to trade with small capital, small amounts of money, because you need to get that mindset gone. If you place a trade on any instrument, and as soon as you place it, you're scared, you're over leveraged, you've got too much size on, you need to be able to press the button and go, whatever. That has got to be the mentality, because you've got to hold it to make any money. And you can't hold it if there's too much on there. If this thing, every time it ticks up and down, costs you $10, if that candle there is $50, you're never going to hold it because the amount of money is too much. If that candle there is 50 cents, you couldn't give a monkeys if it does that, could you? What you'll actually do is give your trade time to work out by having small positions on. This is what position trading is all about. I can be in a position for a month and just wait because I'm buying by self-market movement. You need market movement to make money. When the market doesn't move as it has on that What did we just look at? Euro CAD, wasn't it? That hasn't moved. And you look at stuff that's gone sideways for days, we just sit here, we wait. You can't make money if it's not moving. The only thing you can make money with in the market is movement. If something doesn't move, you can't make money. If you drop down onto the lower time frames, you can make money, but then you're just trading algorithmic chop, which has even less chance of having any kind of pattern associated with it than any time frame above it. So there's no point in doing that either. One of the reasons I ask about exits a lot is because I don't want to be eating like a bird and shitting like an elephant. What? I've not heard that one before. Profits compared to drawdown. Yeah. This is what the propulsion gap target indicator is for. Yeah. When this goes up, we don't know when it's going up, right? So look at all these grey boxes, which are propulsion gaps that have been hit and completed. Yeah, all these grey boxes everywhere. Everything you see pretty much on this chart, apart from those two there and that one there, are grey. Because price moves from propulsion to propulsion. Every time the banks put a large order in, there'll be other banks that are caught offside that need to come back to that level. Yeah, so if you are long from here, you would be targeting that. As price pushed down, you would keep going long and then you would target that propulsion gap. Pushes down further, you move your target to that one. Pushes down further, you move your target to that one. You just keep moving your target to propulsion gaps because when it goes, it's going to go to those propulsion gaps. At the moment, it's on its way to this one. It's taken a month. It's going to get there. Probably get to those as well. Might do that first and then do that and then sit there for 3 weeks and then go down there. I don't know. But if you need help with targeting, it's always propulsion. Always. Aussie, New Zealand. Propulsion. I got out when we got into that propulsion gap and we started looking bearish, which was a previous level of support. Support, resistance, propulsion. This is why this indicator that you're seeing on the screen here is called the support, resistance, propulsion indicator. It's a bit of a mouthful. Support, resistance, propulsion. That is all there is. Levels. So you target them. Just think levels. Where are the banks going next? That's all you need to know. CAD Swiss. When it goes long, where are they going? There or there. Yeah, that's where I will get out there with that tiny bit of profit. Why? Because it's been in it for too long. I've been squeezed on it and I need to get out. That is probably where they're going to go. Or there. That's all I've got for you. I have not no crystal ball. All I've got is levels. Look left. I think it's a common theme with position traders where we're comfortable sitting in 4% drawdown in a position, but get itchy fingers when we're 0.5% in profit. Yeah, but your job is to make 0.5% in profit. There's no rule, right? This is a rule that someone at some point made up. You have to make more money than your drawdown. Someone somewhere made up a rule that you can't go into 2% drawdown and then take 0.5% of profit. That's ridiculous. Somebody made that rule up and everybody goes, well, I don't want to go into more loss than I will make. Yet every bank, pension fund and institution on the planet does that. Yeah, hedge funds regularly, pension funds regularly go into 15, 20, 25% drawdown on the fund while they're waiting for profit moves to happen. No one's ever told a hedge fund that makes billions of pounds a year that you can't go into 15% drawdown on your fund. That's ridiculous. Your fund is there to be drawn into to make profit. Why can't you go into 4% of drawdown to make 0.5% profit? If you can make 0.5% profit a day by closing one position a day, every day of the week, you've made 10% profit in a month. That's better than 95% of other traders out there. By using your account balance to wait for market movement to bank you 0.5% a day, you suddenly make 10% a month. 99% of traders would snap your arm off for 10% profit a month. But their rule says you can't take 1% drawdown and 0.5% profit because they're used to trading risk to reward. You are taught and hammered into your head that a risk to reward ratio has to be positive. If I'm going to take a trade, I need a 1.5 R. I enter, I stop, my target has to be 1.5 R bigger. You're brainwashed into thinking that you cannot use more drawdown than profit. Rubbish. Utter rubbish. You can draw down 3%, 4%, 5% on a position and come back up and bank 0.3% and go, I made money. What's your job? Making money. That's it. Your job is to get into positions, wait for the market to come back to a level where you can make this green. You have no idea when it's going to happen, so you just got to wait. That's it. That's all there is to it. And if it gets really, really, really bad and uncomfortable, and again, that's what we're talking about with the position trading bootcamp, I talk about your comfort level is where you are going to exit. That's it, where you are going to exit. What's your, I don't like this anymore. That's where it is. I don't know where it is. It's where it is for you. For me, on oil, it was 9%. I went, screw this, I'm out. Just as it bounced. Always is. Every time you get out, it's just as it bounces. Because they're squeezing you. That's why they call it a squeeze. They're nasty. Position trading is really a 180-degree shift in thinking how to trade. Yeah. You're shifting away from trying to find a way to make money out of the market to waiting for the market to make you money. That's the shift. The mindset is not, how can I make money out of this market? It's how can I get into this market and wait for the money to come to me? Extracting, this is why I call it, you'll hear me talk about extracting money out of the market all the time. I'm not trying to make money out of this market. I'm getting into the market and waiting for it to get into a position where I can be paid from it. I have no idea where it's going. So how can you possibly formulate a position, a strategy to get into a market to make money out of something that has got a random outcome? It's exactly the same as roulette, blackjack, and everything else out there that you find in a casino. The edge is not on your side. Yeah, you can walk up to a roulette table three times on the trot and walk away with a profit. The fourth time, they will take back way more than you made because it's chance and randomness. This is totally random chance. The CAD Swiss is dropping like a rock now. What's it going to do tomorrow? Be up here or go further down? I don't know. We'll find out tomorrow. But there isn't anybody on the planet now that can predict where this is going. Of course you can't. So how can you get in there and put an order there and not have that make you a loss? You've no idea if that's going to be a losing order. You know, it's like saying, walk into a bar, right? Put $10 down on the table and say, give me a drink if you fancy it. Yeah, you would never do that, would you? You want something back in return for what you're going to give. Yeah, if that barman turns around and goes, you've just lost it. Why would you do that? You wait for the drink to land on the table and then you give them the money. Yeah, you don't put the order in there to lose the money before you get your reward. Nuts. Just programmed to do it, aren't we? It's stupid. What's the SIH been like this evening? Good? Not too bad. So NASDAQ was 2R straight up target. Hedged on that one. The Dow was no trade because the move was too big. This is why we do not trade large ranges. You can't get out of them. So hedged on that. DAX was a win this morning. NASDAQ's been a win. S&P is a hedge. Best prop firm for position trading? There isn't one. Because it makes money. They don't want you to make money. They want you to buy their demo accounts all the time. I'm the best trader this side of the Mississippi. I don't even know which side I'm on. With 4 trades, you have a positive overall, not a 0.5% to negative 4%. Your last trade might be up 3%. What? With 4 trades, you have a positive overall, not a 0.5% to negative 4%. Your last trade might be up 3%. I don't know what that means, Les. Brian blew a 25k evaluation today. I shouldn't laugh. I really, really want to open a prop firm. Having traded prop and taken money out of prop, I would love to start a prop firm. We found that place this morning, didn't we? When we were, I don't know if you're in the live room this morning, but we found a company that another company that will start you off a prop firm within weeks. The best business model in the world, isn't it? Sell someone a demo account. They're free. Crazy. Would you make a prop firm actually for traders? No. I don't think you can make such a thing, can you? If you think about it. There is one. It's called Darwin X. It's a broker that has Darwin AI, which is a prop firm for traders. Basically, you give them your trading history by trading with them for a period of time. They look at you and go, that guy's got good risk management, and then they get investors to invest in you. That's a prop firm. Sell a demo with restrictions, exactly as Brian's just said. That's what they do. That's all prop firms are. You just need to know how to play them. They are like a casino. It's the same as gambling, except they haven't quite worked out the edge. They have worked out the edge in their favor because most people haven't worked out how to play prop firms. That's the difference. You've got to make sure you know how to play the prop firm. You've got to take multiple evaluations and get some of them over the line. It's all about gambling and going in high risk, high leverage. And the ones that you get those lucky trades, like today, CAD Swiss. Yeah, if you'd have started a prop evaluation this morning on CAD Swiss and pressed the short button, you've passed. It's a 50-50. Literally, set up 4 prop firm evaluations. Get 1 index on each. Hit the buy button on 2 of them. Hit the sell button on the other 2. Wait. You will pass 1 of them. Yeah. That's it. If they're going to restrict your rules to such an extent where you can't trade normally, don't trade normally. Trade like a lunatic. You're going to get a lucky streak at some point. And it's going to pay you big time. The only way to make money. Brian, if you're trading futures in the US, look at Trade Day as a prop firm. They let you withdraw same day. Take Profit Trader do as well. This is the company I use. I don't know what Trade Day are like, but these guys are very good if you trade futures. Again, heavily restricted, and you will blow accounts very regularly. But for me, the number one thing about prop is getting paid. You want to get paid straight away. As soon as you get that profit in that account, you want it out because you're going to blow it. So you want it out. So yeah. Futures is probably the best way for prop, to be honest, because you're over leveraged. You're trading contracts, aren't you? So I've just taken that long again on CAD Swiss. Just had a reversal alert on CAD Swiss at 125 ADR. Which has literally been invalidated immediately. So the reversal alert was there. Look, where's the trade? There. So that was the reversal alert candle, somewhere around there. So long again. That's really annoying because that trade that I've broken even on there was $1,200 profit this week. That one. that high there was $1,200. I didn't take it off because we made a new high, and I was expecting a higher low push. We haven't got it again. We're going still into this range. Swiss franc's fault, not the Canadian dollar. Nothing we can do. Right, I'm going to leave it there because it's 4 o'clock. So the S&P is the only position that I've got on now on the indices. So we'll be holding this either down to ADR or, I mean, the chances of us pushing up to that big round number 150 ADR today now are very, very low, aren't they? We've reacted off of ADR. But that reaction, again, was caused by the Fed. It wasn't caused by anything else. Crude inventories have just come out as well. Whipsaw on the crude. So yeah, so I'm just going to hold on to this hedge. It's just locked in. So $250 on the afternoon, basically. If we do that, or we do that, I'll exit and I'll try an aggressive exit on it. But that's it. If it doesn't get there, I'm just going to leave it today. Just close it out at end of session. We're coming up to 1.5 hours into the session now. So either that is the low or that is the high. One of those two is highly likely to be the case. So if that's the high, obviously, that's my target. If that's the low, my target's got to be well beyond ADR. We are sideways at the moment, as we know. So this is potentially a price discovery move, which is failing, in which case that's the only way down or the only way out, basically. So we'll see what happens. 9:24 banked. You're done. Good job, Brian. Right, so I'll be back tomorrow morning, 7:50, same time for the Frankfurt session, 2:20 for New York. The positions, basically, nothing much happening on them at the moment. I've banked 0.3 today. Everything else is very mixed. US dollar Swiss is getting a little bit hairy again, and CAD Swiss. So the Swiss franc basically stuffing me at the moment. So could really do with some positive news out the euro, but it's not happening. So we'll see where we are tomorrow. News-wise, overnight, there's nothing to worry about. We've got euro CPI flash estimates, which will be down tomorrow, probably. OPEC all day tomorrow for oil, and CAD GDP. So tomorrow is all about the CAD. So we'll see where we go there. David, I made a live funded account last night. Risked 4.5% on the Aussie New Zealand sales. Went all in and banked 20%. Very good. Gambling. Take it. Walk away. That's what it's all about. 4.5%, that's a hell of a risk, though. But, you know, it literally is a coin flip with prop. They give you 5% a day to work with. Work with that 5%. What they're saying is, we can give you 5% risk. Take it. If that trade works out, you are going to milk it. Yeah. Think about it on prop. What you actually need is 3 trades in a row to work out. If you get into a trade, put a stop loss half an ADR away in a short, right? If it does go short today, you've passed stage 1. On to stage 2. Yeah. Use half an ADR of a stop, go long or go short. Pick one. Wait. If it hits your stop loss, go on to tomorrow. If it doesn't hit your stop loss, you've passed stage 2. You're now funded. Repeat. If you're lucky enough to get 3 trades in a row, you've just made yourself 5 grand, 10 grand, or some fantastic amount of money. Seriously, that's the way to trade prop. You are paying whatever you're paying. This is a bad example because this is monthly, but you are paying $300, $500, whatever it is, to take some trades and hope that you can 10x it. So you need 3 trades with your $500 you pay for a prop account. Yeah. Do that 5 times, you'll pass one of those. If that one that you passed returns you more than you've paid out in evaluation fees, That's prop. That's how you do it. None of this, get an account, hold it, try and grow it. Come on board. We'll get you up to 1 million in 6 months. You'll never hold it more than a week. Win a free pro account. Yeah, no thanks. You can't win a free pro account. That's not the way it works. For some reason, I trade better on a static account. Yeah, I used to trade on static accounts with Lilu. But, yeah, it's all a game, prop. Right, I'll leave it there. Anything else you need, let me know. I'll be back tomorrow, next session tomorrow morning, 7:50 as usual. Anything you need, come in Telegram. Otherwise, have a good afternoon. I will see you guys tomorrow.